I am pleased today to present the Fiscal and Economic Update. And I'd like to mention that this follows last week's release of the 2015 public accounts. I am pleased that our government has tabled the public accounts early. I might add the earliest time that public accounts have been tabled in some 18 years. And I want to thank the staff and our Public Accounts Division and the Office of the Auditor General for their efforts in this regard. And I know there may have been some confusion in the public about the deficit, about the public accounts, but I want to clarify that this number is for the previous year's budget, for budget 2015. In last year's budget, the previous administration had forecasted a deficit of $1.1 billion. And that number was later revised after last year's election by our government to be a deficit of $2.2 billion, a doubling of the initial forecast. The public accounts audit released last week confirmed this number. So that brings me to this year. I am pleased to announce that today our government has improved our fiscal performance with respect to our financial targets for budget 2016. This year's deficit is now projected to be $1.58 billion, just under $250 million, less projected at budget time. In addition, borrowing requirements have been reduced by $500 million to $2.9 billion. As you can see, the lower deficit number is primarily the result of more than a $200 million increase in total revenues and a $50 million reduction in the risk adjustment. The risk adjustment has been reduced given that we are halfway through the fiscal year and we have seen slightly higher revenues than expected at budget time. While oil prices and production have been higher than we have anticipated, there remains volatility in the oil price, particularly around OPEC's meeting later this fall and the uncertainty as to whether supply cuts will be made by OPEC nations. The reduced deficit also takes into account lower than anticipated program expenses of $111 million. But we are still facing significant increases in debt expense, as well as the current assumptions of pension and post-employment benefits from the province's actuary. So let me expand on some of the significant changes to revenues and expenses. And let's begin with revenues. Personal income tax is up about $55 million from the budget forecast, primarily due to the higher 2015 tax base. Corporate income tax revenue has been expected to increase by over $51 million compared to the budget forecast, and this is primarily due to changes in offshore and federal payments. Oil royalties, which were forecast at budget to be over $500 million, are now projected at over $600 million due to slightly higher than anticipated oil prices and a small production increase. Total production is expected to increase to 70 million barrels. And on the expense side, program savings of $111 million were achieved due to lower than anticipated program spending. but increased debt servicing costs of $130 million leave us with a slight increase on the expense side of $20 million. Our government is focused on achieving more efficient public sector operations. We are committed to achieving our deficit reduction targets by eliminating waste and employing an overall approach that ensures all spending decisions are justified on a year-by-year basis, with no automatic assumptions about spending from year to year. And since we took office, we have been closely reviewing the structure of government and identifying opportunities to streamline. Continuing this course, we will pursue a flatter, leaner management structure within the provincial government. As I've already mentioned, the projected oil royalties for this year are expected to increase by $99 million. And these projections are based on an average oil price of $45 US and a 77-cent exchange rate. While oil prices were slightly higher than projected so far the year, we know all too well the volatility associated with both oil price and production. And it is for this reason that we cannot depend on fixed oil royalties for our general budgeting process. We will not allow oil revenues to mask our realities. As promised at budget time, we reviewed the temporary gas tax. This tax was implemented just 4 months ago. And given the continued seriousness of the fiscal situation and the fact that this implementation is just 4 months ago, we continuously review the gas price and the data, and we will complete a review again in Budget 2017. Government's borrowing requirements for this year were estimated at $3.4 billion. That amount has been reduced to $2.9 billion due to higher revenues and deferred cash flow from infrastructure projects. Given our decision to include a $350 million prudence amount in the borrowing projections for this year's budget, the June cost update for Muskrat Falls did not increase our borrowing requirements for this year. And further to that, we are pleased to have already secured 71% of the borrowing requirements for this year. As we have said since the budget, and again today, our government remains committed to achieving the financial targets set in Budget 2016, including a return to surplus in 2022. As decisions are made, the public and key stakeholders will be informed on future actions to reduce spending, to increase revenues through economic diversification, as well as the outcome of our ongoing dialogue with the federal government related to our fiscal situation. Now, as you will see from this slide, our economic indicators are generally on par with what we budgeted as part of our budget projections. We did see a slight decline in economic activity, but we are pleased to say that the province's population has increased by 3,000 people. I'll touch on a few areas, but further details are available in the Economic Review publication, which is also being released today. Expectation for real GDP growth is slightly lower than was expected at budget time. This is because higher than expected oil production was insufficient to offset lower than expected major project investment and lower than expected employment and labor income. It is worth noting that the Canadian GDP forecast has also been revised downwards by 0.3%. Housing start expectations are on par with the budget forecast. And as I've already mentioned, our population is higher than forecasted at budget time by approximately 3,000 people, due primarily to increased migration. So before I take your questions, I'd like to take a moment to thank my caucus and cabinet colleagues who are in the room today, as well as the people of the province. This has been a very important process for us as a province. And the people of the province understand that the fiscal situation we are facing with requires thoughtful attention. Before I take your questions, I also want to take a moment to thank the Department of Finance for their continued hard work on behalf of the people of the province. Our government is pleased that we have improved our fiscal performance, and the Premier will be releasing a vision document in the coming days that will provide clearer plans for growing the economy and providing quality services while restoring fiscal balances. And our government will continue to practice strong fiscal management on behalf of the people of the province. The seriousness of the fiscal situation remains and needs to be addressed. And we remain committed to the fiscal targets set out in the budget of 2016 to return to surplus in 2022. Thank you.